Alper Bey'e teşekkür ediyoruz. Şimdi de birazcık we're gonna switch languages and I'm going to introduce HOSS. He's a commercial loan and SBA loan broker and go from there. Thank you, HOSS. Come on.
Yeah, no, that's fine. Thank you, Mike.
Test. Go ahead.
It's working. Hello, everybody. My name is HOSS, as Mike said. I am a commercial loan officer. I've been doing this for 25 years. I do commercial and SBA for properties and businesses. With the property, without the property, any kind of business, gas station, car wash, liquor store, startup business. Of course, startup is a little difficult. But today, Mike asked me to just briefly talk about business loan and commercial loans. So I'm going to cover a little bit of each. If you want to know about the property loan or business loan, just stop me anytime you want if you have any question. How many ways can we get a loan for a business? There are two kinds of loans. One SBA loan, one is a commercial loan. On the SBA, of course, there are some qualifications that you need to have. On the property is a collateral itself. So the first thing is we look at it when somebody wants to buy something. We ask them if you're buying a business or if you're buying a property. If you're buying the business with the property or without the property, because it changes the whole thing. If you're buying a gas station with the property, it's a different story. If you're buying a gas station without the property, it's a different story as well. Loans are different. When you have a property involved, they give you a loan for 25 years. When you're buying a business only, they only charge, the loan is only for the period of 10 years. So there's a big difference. So obviously your payment is going to be a lot higher. Your down payment should be more. You cannot go with 10% down, but I'll cover a few things so that you know. If I want to start with down payment, let's just say, let's talk about business first. If you're buying a business without the property, you can get an SBA loan, which is a government loan, it's a federal loan, or you can get a state guarantee loan. And if you're getting SBA loan, you only have one choice. It's called 7A, which means you can only get adjustable rates. You cannot get fixed rates. And on that one, your down payment should be anywhere from 25, 30, 35, 40. It depends on your qualifications. It depends on how much experience you have, whether you are in the same field, are you in the same line, do you have another kind of business exactly like that, or you're just a newcomer, you're a bank teller or bank manager, and all of a sudden you want to come and buy a car wash. Bank looks at it differently because it's all about the risk that they're taking to trust you to give you the money, but to trust anybody to give the money. So therefore, they have to make sure the ability to pay back. That's the key. If they see that you have the ability to pay back from your financials, from your properties, number of properties you have, they will feel comfortable to give you the money. If they don't, they're going to tighten up the rope. They're going to ask for more documents. They're going to ask for a certain number of collaterals. And those are the conditions of federal rule. It's not non-negotiable. We cannot tell the bank, oh, we'll give you this or we won't give you that. So now you're buying a business. Let's say a business is $1 million. You need minimum of $300,000. And then, since the loan is unsecured, and you have the business doesn't have any property except the asset, they're going to ask you for a collateral, which means you have to have a house or something to put up as a collateral, extra. If you don't have that house, they're gonna jack up the down payment. So that's very important. Keep that in mind if you're doing something. So the best thing is always upfront, before you do anything, if you're looking for a business, always call somebody, a broker, a loan broker, somebody who does SBA. They know all the rules and everything. You ask them the question. You give them your tax return. You tell them, basically you pre-qualify yourself to make sure that they want to do that. The bank will give you a loan. You don't want to go put a loan, an offer on a business, go through with it, waste your time, do all those things, and all of a sudden you found out, oh no, bank is not going to give you the loan because you don't qualify, because your resume is not good, because your experience is not in the same field, or a lot of other things, or the business doesn't cash flow. When you're doing that, you want to talk to somebody that tells you this business, the one that you're buying, your tax return has to be good. Your tax return has to be somehow to convince the bank that this person can pay the bank. But more important than your tax return, bank wants to see the selling business, the business that you're purchasing, has a good cash flow and is doing well, because otherwise, bank is going to be at risk. So you need to cover that area, the tax return, your resume, your qualifications. And once you have those things, and then you can start thinking about, like, what kind of business do you want to go? What is the budget? How much can you put down? How much can you afford according to the cash flow? Is the cash flow enough to afford $10,000 a month? These days, all the SBAs, or not these days, SBA is always based on prime. Prime is 8.5% right now, which means that's the money that the federal government gives to the bank to give you the money. Now the bank needs to make some profit, and that will be another 2 points at least, or 2%. So your 8.5% prime, it's going to turn up to 10.5%, and sometimes 11%, because bank is going to see how much risk they're taking, and they will. The more risk, the higher the interest. Yes, a few years ago, we were doing SBA loan. The prime was 3.25. We were doing prime plus 2. The rate was 5.25. These days, it's just very high. So you have to be prepared for a high interest rate. Of course, all those loans are adjustable, which means when the prime goes up, your loan is going to go up. No ceiling. Prime can hit 20%, and your loan is going to be prime plus 2. Or the prime can go down, and your payment is going to go down. Of course, some banks, they will, if you don't realize, or if your loan officer is not an expert in the SBA field, they will throw something in the notes, and they will say your floor rate is prime plus 2, which means right now, if it's 10.5, it's going to be your floor rate. It means the prime can go to 4%, and they're still going to charge you 10.5%. Your rate doesn't go down. And anytime you see floor rate, that is your key. They will not lower your interest rate. So you got to make sure your interest rate is bouncing and adjusting every quarter. If prime goes down, you go down. If prime goes up, your payment goes up. So basically, that's something